Hey, students of iMarkets Live. The following Crypto Academy video is designed to help you implement areas of support and resistance onto your charts using the order book and understand concepts such as supply and demand. Remember, we're all learning together and it's essential you implement the knowledge within. Should you accept the full risk and responsibility, please continue forward with the training now. This lesson will focus on answering the following questions. Before we continue, pause the video, read through them, and be certain to minimize any distractions. Every cryptocurrency exchange gives you the ability to see an order book, although the information is going to be different depending on where you're looking. When we talk about the foreign exchange order book data that we have access to, it does not even come close to comparing with what it is we can see when we look at cryptocurrency. The order books we are going to be covering in this particular training are as follows: BFX data, which is a third party resource, and the Bitfinex exchange order book, because it is one of the most active cryptocurrency exchanges at this point in time. We're looking at the Bitfinex data. This is a real-time updated source of information where we can look at a variety of assets to see exactly where specific buy limits and sell limits reside within the market. As you can see, under the order book section, we have several different pairs that we can look at. Right now, we're looking at Bitcoin's data. This website does offer us a chart leveraging the trading view data on the Bitfinex exchange. We can see the volume over the last hour, the total number of sells and buys that have moved in this particular marketplace. The total being 649 Bitcoin within the last 60 minutes from the time that we're looking at this. On the volume for the last 24 hours, we can see the total number of trades that have occurred. We can also see down to a specific time all of the most recent trading activity that has come into the market. Sometimes this website does experience a little bit of a delay in updating the statistics because it is a third party resource. We can see exactly how balanced the market is with this little visual overlay of where the buys and sells exist. The bids represent all of the buy limits, and the asks represent the sell limits. We can see all of those orders below current price and be able to identify areas of support or resistance by understanding the concept of supply and demand. Demand is an area below current market price where people are willing to purchase an asset. We can see that price right now is at $6,850 per Bitcoin. At the $6,830 price, there is 84 Bitcoin at this moment sitting as pending buy limits. If we go down another $5, there's another 100 orders worth of buy limits sitting there waiting. As we scroll lower, we only get a limited depth within how far we can see on this particular source of information. Over on the ask side, where the sell limits are, we get similar information. We can identify areas of significance that have hundreds of Bitcoin sitting on it. And we can also see the total accumulation of orders between current price and a predetermined market level that we're looking at. Because this information on BFX data is limited, we can only see so much depth with these specific price points that we're considering. One of the most powerful things that we can understand about these levels is that they are going to change because the demand, as it increases, Buyers are going to be forced with the decision of moving their order up closer to current price so that they can get filled, or they will take a market execution, which in turn will eat up these orders sitting on each particular price level, creating the movement that we see in the candlestick. This information is going to be changing all the time. Even though at this particular moment there's 149 Bitcoin sitting on the $6,845 price, in the future, whether that's 5 seconds from now, 5 minutes from now, at the end of this hourly candlestick, these orders could disappear because the individual or algorithm managing that position may choose to delete it. As we just noticed, 134 Bitcoin worth of US dollar volume popped in at that $6,850 price level. The depth of the market is going to change as the price continues to fall or rise. And because we only get a limited amount of information on the BFX data website, a very powerful tool that we can tap into is the entire order book for Bitfinex. This exchange, more often than not, is one of the highest levels of volume across any cryptocurrency marketplace. When we refresh the page, it's going to give us the most recent data, but it does not update in real time. So if we want to cross-verify the accuracy, we can see the price of 6,845 currently, 149.98 Bitcoin sitting on it. We can come over and we can see that that information is valid, but now that it went up to 150 there momentarily, it's not going to update on this website until we refresh the page. But we can scroll down and we can see much more of what's happening at specific price points. And why this is significant is because on our chart, we can see that price is at $6,865. If we wanted to implement areas of support and resistance, zones of supply and demand, we can use the order book to our advantage, and we can see from current price down to a specific level exactly how many orders are waiting to enter the market. So if we start at the $6,850 price that has about 100 Bitcoin sitting on it, $5 lower, we can see another 149. Within that $5 range, the total number of Bitcoin sitting waiting as buy limits goes from 167 to 329. We can continue scrolling lower, and we arrive at the next area that has 100 Bitcoin on it, 6,825. Within that $25 range, there's a total of about 600 Bitcoin waiting to enter the market. We go lower, we can see another 200 at 6,815. We go lower down to 6,800. That major whole number has another 210 sitting on it. This is the first time that we see the total accumulation of orders cross 1,000. And when we look at the sell orders on the right-hand side, we can see that the number of buyers compared to sellers around the current market price is more than double. So there is a clear imbalance for people who are looking to enter the market and purchase Bitcoin at this moment in time. The demand is going to change as the price fluctuates. If it continues to rise, we may see more of the sellers looking to take profit and push price back down lower to the area of demand where people have existing buy limits waiting. Of course, because we can trade both directions in the market, individuals who may look to be taking profit at a higher price could re-enter at another time. As we go lower and we start to build ourselves a range, If we wanted to identify a $150 area, we could come down to that major whole number at 6,700. We can see that total accumulation has become imbalanced to the point of where there's almost 3 times as many buyers compared to sellers. And we could come over onto our chart because we recognize that there is a lot of volume within a specific area. What we could do is we could enter our price lines between 6,850, where we know there is currently a lot of buyers ready to enter the market. We could enter the floor of that zone down at 6,700. We could come onto a higher time frame and cross-verify the accuracy of this particular area of structure to see if it is represented within our technical analysis, to understand if in the past it's been an area that required a large amount of volume to successfully push through it, big, strong candlesticks being required to get through a specific area on our charts, definitely shows us it is an important area to consider within our analysis. When we verify specific patterns that are playing out within our charts, and we recognize areas of consolidation where there is a clear balance of people willing to buy or sell, we can verify what the trend looks like and develop a confident bias as per where we believe the market is going to go over a specific period of time. And when we're utilizing a tool like the order book in confluence with areas of supply and demand, with areas of support and resistance, with other technical indicators like our moving averages, our Fibonacci, harmonic patterns, it's important for us to realize that these areas we implement on our chart will not work 100% of the time, but it gives us that confidence going into our trading decisions. And this is why using a tool such as the order book and having the ability to see exactly where people are looking to enter the market, in conjunction with our understanding of human psychology, different theories out there that people take and adapt into their trading systems, the more confirmations that we have in our favor. Being able to recognize areas of significance just by taking a little bit of extra time with our analysis. This is a simple way of determining the accuracy of the areas that you're identifying on your chart, because you have the opportunity with cryptocurrency to go and see if the areas you have implemented with your technical analysis leveraging the existing structure and other patterns that you see occurring within the market, the order book is going to give you that extra level of confidence, and you're going to see what exactly happens at specific areas on your chart, because you are able to go and implement this in advance before the price movement even occurs, so that once it arrives at a reactionary zone, whether it is above or below where the price currently is, you're going to be more prepared to take your position. And perhaps you've even gone one step further and you've utilized the limit orders so that you can get into the market without having to be there monitoring it. Because remember, when you start to notice what happens at true areas of supply and demand, the ones that the professional traders are looking at, whether you're anticipating a breakout, being patient and allowing price to be attracted, almost as if certain areas on the chart are magnetic. This is the order book almost 8 hours later. And as we can see, the diversity across some of these levels has changed pretty substantially. But the same price points remain significant. We can easily jump down and identify all of the areas that other traders are looking at. And we can expect that once price is ready to move in a specific direction, there's going to be some quick and powerful movements. When we experience that change in price to the upside, in moments like this, there's so much demand to get into the market. The buyers are literally driving the price higher because they must find sellers that are willing to take the other side of the trade. We can see these levels on the order book very easily in cryptocurrency. And when there seems to be very few buyers left, that imbalance of sellers is going to drop the price lower in order to entice buyers to begin to enter the market once again. In a movement like this $1,000 price change, when we think of trading terminology, $1,000 price change is 1,000 pips. 1,000 pips on a micro lot. It's $100. 1,000 pips on a mini. It's dollar for dollar. If you're trading standard lots, that 1.0 default trade size when you first start using a demo account, same price movement occurred in the market, but now you're experiencing a $10,000 change in your account. Converting price movement into your risk and reward management system before you even enter a position becomes simple once you get in that habit of doing the calculations. And I would really encourage you to start converting your spending into pips. Now, this simple exercise is going to help you see that $3,000 trading setup would only be about 300 pips if you were trading a standard lot. Paying that $250 bill at your team's dinner. If you're trading mini lots, you're talking 250 pips. Perhaps your weekly grocery bill is $100. And you're trading micro lots. So on the smallest position that you can physically enter the market on, if you are trading on margin, that $100 is going to be 1,000 pips. You can find trades like this in any market. Understanding it's going to take time for the chart to develop. Go ahead, open up a Forex pair, a commodity like gold or silver, even a different crypto that isn't Bitcoin. Select a higher time frame and start drawing these areas that you feel price could experience a reaction at. Recognizing that the anticipated movement or trade setup where you have that high quality confirmation that it is time to enter the market. Practice makes permanent in anything, and it is no different with your trading development. Your ongoing success in these markets is going to require an investment of time. And if you won't put that in and really do what it takes to learn this at a slow and steady pace, applying the concepts and sometimes coming back several hours later just to find that the chart is at the exact same area it was previously at, then how will you ever be efficient and fast? In summary, utilizing the order books to identify these areas of supply and demand is an effective way to increase the probabilities of our cryptocurrency margin trading decisions. Because we can easily see these key price points that other traders are looking at and understand the psychological implications of taking action at specific moments in the market. Be sure to leverage our resources and actually implement the education because all trading requires is persistence, discipline, and acceptance that you can learn this skill set.